How to draw trend lines. In order for a line to be a valid trend line, it must connect two or more peaks or troughs. Otherwise, it will be drawn in space and will have no significance. You will often see people constructing lines that only touch one point. That is a big mistake. Trend lines are perhaps the simplest and the most used tools in forex trading. We use in the technical tools and are one of the most effective. Since the structure of all price patterns requires the use of trend lines, this concept is a fundamental building block of pattern identification and interpretation. A trend line is a straight line connecting either a series of ascending bottoms in a rising market or the tops of a descending series of rally peaks. Those joining the lows are called up trend lines, and those connecting the tops are referred to as down trend lines. It is also possible to build horizontal trend lines joining a series of identical lows or identical highs. Normally, a down trend line is constructed by joining the final peak with the top of the first rally. When the price breaks above the trend line, a trend change signal is given. The opposite is true for an uptrend line. Please like and subscribe and click the bell icon to get new video updates. Extended trend lines. Most people observe the break of a trend line, then accept that the trend has changed and forget about the line. This is a mistake because an extended line can become just as important as the standard trend line itself. The difference is that an extended line reverses its role. Just as a return move often happens following a breakout from a price pattern, a similar move, known as a pullback, sometimes develops following the extended line. This example shows a trend line reversing its previous role as support while the throwback move turns it into an area of resistance. Trend line breaks can be followed by a reversal or consolidation. The completion of a price pattern can represent either a reversal in the previous trend. In this instance, it is known as a reversal pattern or a continuation of the previous trend when it is called a consolidation or continuation pattern. In addition, the breakout of a trend line will result in either a reversal of that trend or its continuation. In this example illustrates this point from the aspect of an uptrend. In this case, the trend line joining the series of lows is eventually broke on the downside direction. The breakout of the trend line signals that the sellers will become stronger. The upward price trend and trend line breakout in this example are identical to those in the last example, but the action following this warning signal is absolutely different. This is because the trend line violation results in the advance continuing, but at a slower rate. A third case is that the price consolidates in a sideways trading range and then continues in upside direction. Ideally, an uptrend line is constructed by connecting the final low with the first bottom in the rally, as line in the example. This is called the primary trend line. The example shown here offers a smooth angle of ascent. Unfortunately, the price rallies clearly, which means that the violation develops well after the final peak. In such situations, it is better to redraw the line as the price moves up. In this example, the second line is obviously a better reflection of the underlying trend. This is called a secondary trend line. Down trend lines are constructed using the same principles, but in reverse. Since trends can be sideways, it follows that trend lines can also be drawn horizontally, which is often the case when we construct price patterns such as the neckline of a horizontal head and shoulders pattern or the upper and lower boundaries of rectangles. In the case of price patterns, the breakout of these lines usually signal the change in trend, as does the breakout of rising or falling trend lines. Measuring the target. Trend lines have measuring targets when they are broken, just as price patterns do. The maximum vertical distance between the top of the price and the trend line is measured during a bullish trend. Targets are usually reached when a trend line turns out to be a reversal type, but because they are more often the price top objective becomes more of a minimum expectation. When prices move significantly through the target, this area often becomes one of resistance to the next major zone or support for a following reaction. This example shows some of these possibilities in both a bearish and bullish market. Oftentimes, these price objective areas prove to be important support or resistance points. Unfortunately, there is no way to determine where the actual point will be for any rally or reaction. It is only possible to speculate on the probability that a specific area will prove to be an important turning point. This was our quick explanation about the trendline tool. Hope you have enjoyed it and stay tuned for more videos.